Good morning, everybody. I hope that you're all well, had a good weekend, and all looking forward to the week ahead. So let's have a little look at what happened during the markets last week, shall we? So we saw little movement in the US. We saw the Dow up 0.6% and the Nasdaq down 0.7%. The FTSE was down 0.5%. With our bundle of four this time, we did see it fall 3.9%. And I'll come back to that in a minute. The Nikkei was up 4.3%, Shanghai down 3.8%, and the DAX in Germany was up 3.2%. So a bit of a mixed bag, really, all in all. The Nikkei is an interesting one because we've seen more than 11% growth in the last 2 weeks, and recently I've been considering getting involved in an ETF on the Nikkei. And of course, 2020 hindsight tells you that had I done so, then everybody would have been very happy making 10, 11% in the last 2 weeks. But it feeds back into my philosophy that the fundamentals, I don't really understand the fundamentals of the Japanese economy and the Japanese market right now. Therefore, I won't put my clients' money at risk there. Just to come back to the bundle of four, like I mentioned, down 3.9%. Okay, that was made up of a Facebook plus 0.8%, Alphabet down 5.3%, Apple was down 3.8%, and Microsoft was down 7.2%. Now, those numbers don't sound very good, averaged out at down 3.9%. But when you look at some of the numbers that have come out, it shows what a fickle place the markets are. I mean, we've got Microsoft there, whose commercial revenue risen by 63% year on year. Its commercial cloud business hit the $10 billion mark. By 2018, they're expecting it to be worth $20 billion, that side of the business. Google, we've seen operating income up year on year, 21%. Ruth Porat, the chief financial officer of Google, called it a tremendous start to the year. Yet what happens last week? The stock falls 5.3% because some analysts out there believed it to be better than the earnings to be better than they turned out to be. Profit margins are up. Profit margins are up from 31.2% from 30.2%. It's all about fundamentals. Good companies, fundamentals. Yes, of course, no one wants to see their hard-earned cash fall 5% in value in 1 week, but it's paper losses. And ultimately, you hold these companies for the longer term, they're in good shape. They'll continue to grow. And absolutely nothing to worry about, despite what looks like some rather tricky drops to get over. On the currency side of things, we saw a slight US dollar gain against the euro. It's now sitting at 112. Sterling's picking up 1.4% from 142 to 144. I think, as I've mentioned in my last few briefings, I think you'll find that sterling's undervalued at the moment. So therefore, it's time to be buying those. The Japanese yen fell 2.7%, which is good. But again, the volatility of that feeds into what I said before about not understanding the fundamentals of the Japanese economy. We're seeing a volatile currency, we're seeing a volatile market over there at the moment. Although, of course, the Japanese are wanting their yen to be a bit weaker. And now when it's sat at 112, it's clearly better than it was at 108, albeit they would probably still prefer to see it a little bit further, a little bit weaker still, possibly about the 120 mark. I'm going to start talking about USD Australian dollar in the briefings. I've got quite a number of Australian clients or guys that I'm talking to from Australia at the moment, and their currency has kind of been directly correlated to the mining industry. Obviously, the Australian economy was doing very well under the mining boom. As things have quieted down a little bit, the currency seems to have sort of followed suit, and then it's sitting at 130 against the US dollar at the moment. And although a lot of the Aussies I'm speaking to are kind of bemoaning their weak Australian dollar, actually that's pretty much on a 12-month high, where we've seen it as low as 145. So not all bad on the Aussie dollar front, albeit they still hanker for those wonderful days where you were getting more. It was worth more than a US dollar. So on the pension side of things, we have another shocking story come out of Tata Steel, where the pension has gone into the Pension Protection Fund, £15 billion worth of money 130,000 members. All being well, the Pension Protection Fund will do its job and keep it going and make sure the people who have invested their money get it back, but it's not certain. If you're an expat, you've got one of these funds with these large companies, likelihood is they're going to be deficits. Come and see me, get it offshore, get control of it. Don't become a victim to what could potentially happen there. I realise that I'm talking a little bit longer than my usual 5 minutes here. I'll try and condense it down to 7, but I did have a little bit more to say. In the football, Leicester continue 4-0. What a fabulous result. Anything Tottenham can do, we can do better. We're starting to see the cream come to the top. All being well, they'll win their next 3 games, which I think is could quite possibly happen. 85 points. That competes with the Chelsea's of Mourinho. 85, 86 points. Fantastic, wonderful story. Long may it continue. So to finish with, I'm just going to give you a quote of the day, and this today's quote comes from Philip Fisher, who was a renowned author and well-known investor. And again, this plays back into what I was speaking about earlier, about the companies and the fundamentals and being good companies. And one of his comments was, "The stock market is filled with individuals who know the price of everything, but the value of nothing." So just think about that for a minute. Yes, of course, we want to try and buy low, sell high. That's how you make money in the markets, clearly. But ultimately, it's about value. It's about buying companies that have value. Companies like Google that are continuing to make profits, that are increasing their profit margins, that are growing, that are reaching out to more people. These are good companies. The fact that it fell 5.5% last week because, some analysts thought it was going to do better than it did, doesn't matter. Longer term, you'll make money. Look, I'm 2 minutes over. As you can see by my attire, I'm off to play golf now. Early morning start. Enjoy your week anyway, guys. Anything at all, please get in touch. Cheers, bye.